And we are starting. We are live. Ladies and gentlemen, thank you so much for joining me in what is our final installment of the Digital Asset Data Series. I'm very excited to be joined by Sam Wyner from Kpmg. We are going to be diving into digital asset data and infrastructure and many of the challenges that impede traditional asset managers and investors from entering the market and crypto native firms alike. Sam is a director in Kpmg's Blockchain Center of Excellence and co-leads the crypto asset services for Kpmg US. Sam, thanks so much for joining us.
Thanks for having me. Excited to be here.
Yes, we're definitely excited. It's been fun, amidst all of this chaos and turmoil in the markets to experiment with new ways to engage with our audience. And we've been very pleased with how this digital asset data series has shaped up. And I think has been, it's been fun and interesting to sort of tease a lot of these topics that hang over the space. And I think data is something that is critical to talk about and improve. When we were preparing earlier this week, I told you a joke that I forget someone in the industry made, right when I had first started reporting, which was there are lies, damn lies, and cryptocurrency data, right? It's something that cannot be trusted. And we see every day on sites like CoinMarketCap where, the price of Bitcoin, as an example, at any given moment, depends on who you ask, where you're looking. And that's a challenge. I guess at a high level, when you hearken back on your time in this space, is the data infrastructure getting better?
I think it's getting better, and there's a lot of reasons for that. Data's been a challenge, not just in the crypto world, but in the traditional financial services as well. This isn't a new problem, and I think that there's a lot of opportunities to solve this problem in better ways, especially with crypto. And over the past few years, as we started to see the market grow more and more institutions get involved, we're starting to see capabilities out there, both homegrown and from providers that are trying to and are solving these problems and creating a better environment for data.
Mm-hmm. And there's almost been a sort of Cambrian explosion in the number of providers out there looking to service firms with tools that can help them sort of dissect this data and utilize it in various different ways. What are some of the most pressing needs that investors, asset managers are looking for when it comes to data services and tools?
I think it's so you named a couple of different users there of data, and I think they're all a little bit different. And I think that the trust that's required of the data from those parties differs as well. There's a lot of different data providers that provide different degrees of comfort and assurance over the data that they provide. But it's something that is absolutely critical for them for a number of different reasons. Everything from how they choose to make their business decisions, whether they're trading or whether they're a custodian. They need data to be able to run their front, middle, and back office. And without accurate data, bad things can happen.
What are some of the bad things that they can run into?
Well, pricing is a great example of that. Making any business decisions with bad pricing information, it's never going to be good for anyone, and it's going to be trouble, especially if you're in any kind of leverage position where you need to really know how much your assets are worth at the end of the day. If you don't have good pricing information, you're not going to be able to do that.
Mm-hmm. Someone just threw in a question a few seconds ago about the importance of SOC reporting for data and infrastructure. We've seen a whole bunch of announcements from various cryptocurrency firms over the last couple of years about SOC 1, SOC 2, announcements. How important is that?
It's very important in the financial services world, and really if you're a public company in general, you're going to look for any provider that is touching anything that has to do with your financial statements, which is SOC 1, or any provider that is you need trust over their security, availability, and data accuracy. Those reports are provided by those companies to help their customers, their clients feel more comfortable and have assurance over what they're receiving. A lot of organizations, again, in public companies and large financial services world, if you're providing a critical service to them, it's table stakes. If you don't have a SOC 1 or SOC 2, whichever, or both that are appropriate for the services you're providing, they may not even consider you. And as we're seeing the institutional market grow, that need for having SOC reports, both SOC 1 and SOC 2, is more and more important.
Yeah, it's interesting that that it's kind of table stakes in the traditional market, but we get so excited, or at least the companies in the space get so excited about these announcements, but it's kind of just the base layer. What's the next few steps that companies need to take in terms of reporting standards and being up to snuff from a compliance auditing standpoint that goes beyond SOC 1, SOC 2?
Well, beyond SOC 1 and SOC 2, if you look at what's in a SOC 1 or a SOC 2, SOC 2 is easier to look up what the contents are typically. There's a lot of things that are in there, and there's a lot of things that are not in there. I think that we'll start to see more information, and organizations are going to be looking for more information around how custody of keys, for example, is working. There's going to be some comfort in that over SOC 2, but a SOC 2 doesn't really dive deep into security. It's provides the framework, but organizations are going to want more comfort around that. And I think that there's some bigger risks on the line, given the finality of transactions with crypto especially, that will have to be addressed by some sort of independent reporting.
From KPMG's perspective, when you look at these various attestations, regulatory reviews, the SOC 1 and SOC 2s, you mentioned these different complexities and unique aspects of that digital assets bring to the table. How do you tailor those different, compliance reviews, attestations to digital assets and some of their unique characteristics?
So for SOC 1 and SOC 2 especially, they are standardized reports. There are requirements in order for an independent auditor to provide an attestation on a SOC 1. There's standards that have to be followed that are set by the AICPA, and they are required to cover those basics. And there are some important things in there that are going back to key management, for example. If you think about key management and PKI in general, it's not a new thing. Organizations have been using PKI for a lot of different things for a long time, and that has been incorporated as part of SOC 1 and SOC 2 before. But now the importance of that, the importance of the overall process of managing keys end to end is becoming more and more important, and there has to be increased focus on certain areas in those reports. I think as the market continues to evolve, we'll see possibly some changes in how SOC 1 and SOC 2 and what the expectations are and how they're included and what's going to be included.
Yeah, it's really interesting for me to get that context and perspective. So often when these announcements are released, it's just the headline. We got the SOC 1, we got the SOC 2, but it's nice to get a bit more granular. I think it's a good point to shift to some of the hot topics that people are looking at and thinking about in the space. FATF, especially this week for some reason, has been making a lot of headlines. How are companies coming to KPMG or just in general preparing for FATF and what its impact will be on the crypto landscape?
guess if we're talking about the FATS travel rules specifically, I think it's a fundamental challenge. Addressing the travel rule for crypto is a fundamental challenge, given what the original intention of the market is and what it stands for and pseudo-anonymity. But there are some important factors at play, and anti-money laundering and countering terrorist financing are very important. And there's been a lot of effort over the past year now from a lot of different organizations on how they're going to address the travel rule. There's a lot of great solutions out there. There's solutions that are on-chain. There's solutions that are off-chain. And we're starting to see organizations come together to propose some ideas. And most recently, over the past couple months, we've seen, so the InterVASP group, which includes the Chamber of Digital Commerce, they put out a white paper that sets up a messaging standard. And that messaging standard is basically, it's not a protocol. It does not, it's very specifically excludes a protocol. But what it does include is standard terminology and standard language on how our organization is going to communicate the required information between each other that incorporates anything specific for crypto. So it's been a great effort with a lot of different really great parties helping out to put that together. We're starting to see some protocols put together that are aimed at addressing that messaging standard, to follow that messaging standard from a couple of different organizations. A lot of the on-chain analytics providers and some other groups are putting together protocols. Some are based API-based. Some are more blockchain-based solutions. There's a lot of different ways of doing it. It's something that I think is important for the overall goal, which is preventing money laundering and financial crimes. But there's is not a standard way of doing it yet. I think we're going to continue to see that evolve and done in a little bit of a different way as things continue to move forward.
You even had ING, the Netherlands-based bank, develop a protocol to assist with some of the complications that FATF, brings to the table and sort of helping in tracking those crypto transfers. So everyone seems, to your point, interested in tackling this problem and finding a solution. I guess an interesting parallel would be, how is maybe DeFi impacted by either the travel rule or some of these other, regulatory hurdles that maybe centralized, quote unquote, cryptocurrencies infrastructure may not be.
So DeFi is a little bit different of a story when you're thinking about how DeFi works versus you're looking at how the large exchanges are working together to try to solve these problems. DeFi is definitely still a bit of a moving target. There are a lot of concerns around AML that have not been addressed fully yet. And there's some just fundamental challenges with DeFi, which is you don't really know who your counterparty is. You don't know who's in your lending pool. There could be bad actors in there. You don't really know. It's part of DeFi. I think that we're going to really start to see change happen when we start to see more tokenized assets, native tokenized assets that are following some sort of a regulatory scheme from, whether it's the US or somewhere in Europe. We'll start to see more clarity and expectations around DeFi as we start to see more regulated type assets and securities being passed around in DeFi, but it's definitely a challenge that has not been solved yet. And it's very interesting to see, especially over the last 2 weeks now, a week now, how fast things have been moving, how much money has been moving, and how much is going on in all of these DeFi networks. So there's a long way to go. I think that as the market continues to grow, it'll get more attention from regulators, and we'll start to see more and more requirements. I think that where these order books are located, that's going to have a big impact on where, if you look at what's happened over the past couple of years, especially a couple of years ago, there's one specific incident where that order book is going to have a big impact on how regulators are going to think about it and how they're going to be able to enforce what's happening.
Mm-hmm. And so how does KPMG sort of help bridge that gap of, that lack of clarity for firms who may want to start wading into this more nascent corner of a very nascent market?
I think that for us to get involved and to provide direction, a lot of it's going to depend on what happens in the regulatory environment. If there isn't anything for us to, if there are no industry practices or regulations that we can base our what we're working with our clients on, it's not something that we may want to touch directly. And I think that is reflective also of what we'll see on the institutional side and a truly institutional level investment in DeFi, where there's just too much uncertainty right now. And when that certainty happens is where KPMG and the traditional firms will be able to apply their knowledge of current regulations and new regulations and be able to apply all of those lessons learned, know what's relevant, what's not relevant to meet those requirements going forward. So it's still, there's a lot of things that have to be ironed out at a lot of different levels.
In tandem with the explosion of the market for decentralized finance, whether from a exchange perspective or lending perspective, seen a lot of growth on both of those fronts. We've also seen growth in the stablecoin market. I think we're well above $10 billion in terms of the supply of stablecoins out there. Of course, Tether leading the pack. I guess I'd be curious to know what your thoughts were on, this debate of whether or not you can do a stablecoin audit. There's been folks calling for Tether to do an audit versus just an attestation. So curious to know your thoughts on that kind of debate about whether or not you can do an audit on a stablecoin, and also, the maybe compliance or regulatory issues that engaging with such a product brings for various firms.
Sure. So I guess I have to give a consultancy answer there and say it depends. There's a lot of different kinds of audits. There's a lot of different kinds of attestations. And in order to say a stable coin is audited, it could mean a lot of different things. Audits mean different things to different people. There are different types of audits. And it really depends on who's concerned and what they're concerned about. We have audits of public companies all over the world because there's just general concern from regulators and from investors on are financial statements accurate. Is that relevant to stable coins? Yeah, in a lot of ways it is. But there are other things around stable coins, around issuance and burning and reconciliation against assets that are proof of reserves, I guess in shorter words. There's a lot of things that could be covered by a audit or attestation, and it really depends on who's concerned and what their concerns are specifically.
That makes a lot of sense. I guess I kind of want to take things back to data. And obviously you guys made headlines in that corner of the market for the new tool you release, KPMG Chain Fusion, which is targeting large institutional players. One of the probably biggest issues in the crypto data space is the notion of fake trading volumes, right? When most people think about crypto data, their mind typically goes there: fake volumes, wash trading, and the like. In terms of the tool you guys released, or rather the suite of tools, how does it address that problem? Are you guys providing a window into trading volumes, and how do you sort of separate the wheat from the chaff, so to speak?
I guess so. Trade surveillance is something that is definitely on our radar. It's not something that we've built capabilities out as part of what we put together initially, but it's definitely something that's on our radar. It's absolutely a concern. It's not a new concern from us or from the market in general, because this stuff has been happening for years now, and we'll definitely start to see more and more of a need for capabilities and tools around surveillance in the future, but it's not something currently that we included as part of our initial set of capabilities.
So what are some of the capabilities the product offers?
I think the overall core of what we put together is to solve a pretty fundamental problem. And a lot of this goes back a couple years as we've been working with different crypto first and traditional organizations, which is, how do you take all of the information that you have, whether it's on-chain information, whether it's from your matching engine, whether it's from your payment systems that are where your fiat transfers are going in and out. How do you take all of those transactions, all of that customer information, and get it into one structured format that you can actually do something with and accomplish specific goals? So the first challenge that we had to overcome was, how do we create that structured data model? Where do we get the information from that's trustworthy? And how do we put that all in a usable format so that we can solve some problems? And there's a few different things that we have been working on, basic problems that can be solved by solving that data challenge. And one of those, which I think is relevant to what we were talking about with stablecoins a little bit earlier, and this is relevant for crypto businesses, especially custodians in general, which is, how can you how can you easily reconcile your customer accounts, your wallets, and then your wallet balances on your books and then on chain? And how do you do that with sources of information that you can trust? It's one thing to copy and paste an address into one of the many available public blockchain explorers. Can you do that? Yes, absolutely, but that's not going to work especially on an institutional scale. And being able to do that in an automated way and be able to very quickly figure out, hey, we thought we had this much in this address, but actually on chain, we don't have that much. How do we fix this? Where did the problem happen? We've been building and build capabilities to address that and to help our clients be able to do that in an automated way.
And remedies that issue of fragmentation. I mean, that's one of the issues, right? Is that there's so many different sets of data available, whether it's exchange data, on-chain data, that are in all these different places, to your point earlier. And navigating that fragmentation has to be difficult for a large institution.
Absolutely. I think back to some automation work I did before I started getting into all of this crypto stuff. Sure. Around corporate actions and corporate action information that comes from different data providers. There's a lot of different financial data and financial market data providers that are out there. And there's even, we're seeing the growth of those providers that are specifically have offerings on crypto now. But going back to the traditional world, a corporate action could be issued by a company, and you may get that same corporate action from 10 different data providers. You might get 8 different answers.
Yeah.
If it's a dividend, somebody might say it's 10 cents. Somebody might say it's 1/100 of a cent. It's mistakes happen, and getting comfort around that data is something that is a challenge, and it's important. Part of that is being able to trust where you're getting the data from. There's also a lot of advantages and opportunities to get more comfort around data, just being, having the ability to get cryptographic proof and comfort around data, especially if it's on chain, is very helpful. It's not easy to do that. I think as we started thinking about, as Kpmg is a big four audit firm, and that's something that's a very core part of what our firm does. If you think about going to a client and we have to understand and get comfort around how much do they have in an address? They're saying they have this much. We need to get comfort around that. In the fiat world, or with any type of asset, whether it's a currency or if it's a security, we would write a letter to their bank and say, hey, did these people actually have these assets? Can't really do that in the crypto world. With the all of these qualified custodians coming up, that's changed a little bit. But if we're even just talking about the balance, if you want to go and figure out what the balance of an address is, or the transaction history of an address is, especially as someone where you need to have comfort over where that data is coming from and what that data is, it's not as simple as just pasting that address in a online blockchain explorer. There's a ton of infrastructure that you have to have if you're going to have your own node infrastructure, which there are so many great ways of leveraging others' node infrastructure. There's a lot of great financial data products and node infrastructure products that can really accelerate organizations. And that's one of the ways that we're powering Chain Fusion is through through leading providers and being able to get comfort around what they're providing. Being able to get all that information is not as easy as it sounds. And as soon as we go to our audit professional practices team, who are the ones that they determine how we're going to address audit requirements, they're not comfortable with just pasting something in a blockchain explorer, no matter what. And that is one of the drivers of many, in addition to what we were seeing in the market, of why we put together what we did.
Yeah. And when you have, a platform where all this data is collected and organized in one place, that kind of brings down that burden of sort of accessing various data sets. We were talking earlier this week about the expense of operating a node, for instance, which is crucial for certain data. Whereas market data from exchanges is free for the time being, which is very different from traditional markets where the exchanges are often lampooned for charging so much to access different types of market data, and there are different tiering systems for that. It's expensive in crypto too, but for different reasons.
Yep.
And so does this product in any way sort of help drive down the cost of accessing these different data points? Like, if we're thinking about node data, for instance.
What I think it does is, and what we've built takes advantage of these, like I mentioned, these service providers that already have these existing infrastructures that they can provide on-chain information to you in a structured format that's very easy to use. They can do that, and you can get that information for a lot, for a lot less effort than it would be to build those capabilities on your own and continue to maintain those capabilities. Standing up a node is one thing. Maintaining that node and keeping it up to date, connected to the network, and reliable, and so you can't really just have one node, is a lot of work, and you got to have the right skill sets in your organization to be able to do that as well. And being able to go somewhere, and we're seeing the leading providers here of blockchain and market data in the crypto world, they're getting on the SOC 1 and SOC 2 bandwagon. They know that it's important. Now that you can get that comfort around there, it's starting to make things a little bit easier.
Mm-hmm. Someone is curious about how Kpmg could address potential conflicts that might come up while being an auditor as well as a data provider?
Well, I don't think we have any plans of being a data provider, just to make that clear. We have really good relationships.
You're letting the data providers do the providing.
Yes.
You're just sort of sitting as a middleman, so to speak.
Yes. So what we put together is we call a suite of capabilities or solution. It's not a traditional product that we would go and install and warranty with the client. We work with the leading providers, both on like the wallet or custody solution side, as well as on the data provider side. They have the leading products. They know how to do it best. And we have great relationships with those companies and have worked with them to integrate their offerings into Chain Fusion in order to, for our clients to be able to stand up these things and to be able to use those leading providers that they can have comfort over.
Sure. I guess we could take a few moments to talk about, some of the capabilities, or at least dig deeper into some of the capabilities. Another question from the audience, Danielle Butha wants to know if the tool can access blockchains that use proof of stake consensus algorithms to verify staking incomes and delegations to staking nodes, or a self-operated staking node.
Not yet. I think that's something that we definitely want to do in the future. We're mostly focused on the popular crypto assets. We are focused on the popular crypto assets at this point. So Bitcoin, ETH, all the Bitcoin derivatives, just being that's what a lot of our clients, especially at the large institutional scale, are really interested in addressing.
How are different types of clients using this product? So if we run through the gamut, we talked about potential use cases for custodians, maybe exchanges, brokers. What do the specific use cases look like for those different segments?
A lot of the use cases that we're seeing are around the second and third line of defense. So compliance, risk management, audit, internal and external. And we're seeing a lot of use around those, especially in the compliance space. It's if you look at something like transaction monitoring, which all of the, at least in the US and pretty much anywhere else in the world, the organizations are required to monitor their customers' transactions, especially fiat transactions that are moving in and out of their organization. And a great example of a challenge there is these organizations have crypto transactions. You have customers moving funds in and out of wallets that are either wallets that are controlled by a custodian. It's their own wallet. It's a lot of different ways that funds are moving around just on the blockchain side. And then you have everything on the fiat side as well. One organization that has an exchange that operates in a couple different countries. Now you have a couple different currencies where you have a number of different payment systems that are kicking out data that is in different formats. And you need to be able to consolidate all of that stuff together. And that's something that we've worked on with a lot of clients and are working on now is how do you consolidate all of that data together to be able to create transaction monitoring scenarios that enable you to look at customers' activity across all of those transaction types.
It's really interesting. What has the feedback been so far in terms of how clients are using the product, in terms of shaping your roadmap for the future, in terms of adding more capabilities?
There's been we've had a lot of really great questions, which give us, a really great indication on what the needs are going to be in the future. I think that some of the feedback that we've gotten is that there are some what seem like really basic compliance and risk management, operational risk management activities, especially something around proof of reserves, that putting together a process that will make a internal audit, risk management, external audit, make them comfortable is not as simple as it sounds. And being able to solve that in a automated fashion is something that we're hearing that is, we're getting a positive sentiment around, which is, it's a big problem. And it's not something that's easy. If you look in the traditional world and you look at end of day positions for securities, there's teams of people that their job is to figure out what is our position at the end of the day. And there's a lot of ways and reasons in the crypto world of why that's easier, but there's still automation required, and you still have to do those reconciliations at the end of the day so you know where you are. And being that crypto goes all day, every day, doesn't make that any easier.
Yeah. The 24/7 nature of the space definitely introduces a number of interesting challenges from many different perspectives. What's this? Well, we have another question coming in here. Let's see. Oh, nope, Daniel went away. What's the makeup of the clients that are using this product?
We're seeing interest and use from different organizations. We're seeing interest and use from both crypto first fintechs as well as larger institutions.
What about like government agencies trying to sniff out different nefarious types of activity?
It's not something that I guess the capabilities that we've been working on are not something that we've been hearing interest from law enforcement, for example. Although if we were doing that type of work, I'm sure we wouldn't be able to talk about it anyways. But I think that the tools that are offered by the on-chain analytics providers are more along the lines of what law enforcement might be looking for. There's a ton of success use cases, case studies out there where the on-chain analytics providers have been able to help law enforcement uncover some really significant stuff. And they definitely play in that space, I think, more than we are at the time being. I think that as we start to see the rise and more interest in central bank digital currencies, that will change significantly. We'll definitely start to see, we're going to start to see government agencies, they're going to have some of this infrastructure. They may have to have their own custody infrastructure. They may have to manage their own wallet. They may have to look at all this data. Things will change a lot. I think a lot of things are going to change as we start to see CBDCs come into play. I guess short answer for right now, not yet.
Not yet, but if CBDCs do gain in popularity or become more than just hype, as some might argue they are now, they could be knocking on your door. Are you seeing any initial interest on that front?
Around CBDCs?
Yeah.
And I think that, as you said, there's a lot of hype right now, but there are a lot of very serious conversations happening. If you just look at the news from all over the world, you see a lot of countries are really interested in CBDC and what can, how can they make it real? What are the benefits? What are the risks? What levels are they going to offer it at? Those conversations are absolutely real and they're happening. I think we're definitely not in an if state anymore. It's absolutely a when.
Mm-hmm. I guess looking more broadly across the firm, aside from these data needs and concerns that non-crypto native firms and crypto native firms alike have, what are some of the other issues that they're looking to overcome and need service providers to help them overcome those problems?
It's a lot of the classic, I don't know if you would call them classic, maybe I guess I would, but a lot of the challenges that are common in, if we're looking at the financial services industry, around regulatory licensing, compliance, information security, cyber, a lot of those same challenges apply in a very similar way to crypto first organizations alike. And we see a lot of questions and requests from those crypto first companies to help them overcome those challenges. KPMG has helped a lot of different organizations do that type of stuff, and we have a great perspective of leading practices and are able to help in that way.
Mm-hmm. What's the sense crypto companies you work with have of the way regulators are approaching this space? Do they think they're moving too fast, too slowly? The idea of when clarity, right, has long been hanging over this space, but you have your finger on the pulse of a lot of this stuff. What's the general feeling or sentiment that's out there about the regulatory state?
I think overall sentiment, I think, everybody on this webinar would probably agree that overall sentiment is that if things move faster, nobody would complain.
Mm-hmm.
I think that having more regulatory clarity opens up a lot of opportunities for, new players in the market, new products, new services. I think that as far as how organizations are approaching that, there are a couple of different, I don't think this is any different than most companies. There's a couple of different schools of thought, which is how do we work with regulators and how do we proactively go and build this industry together? And we're seeing trade groups and companies come together to try to figure this stuff out. If you look at like the InterVasp group. And then there's others that are saying, what do we have to do to get by? And we're seeing both of those. I think the former is definitely something we're seeing in the U.S. But overall sentiment is moving faster wouldn't hurt anyone.
Yeah. Do you get the sense that there's a degree or a fraction or number of companies that, because of that slow moving nature of the U.S. regulators, that they're looking to domicile somewhere outside of the U.S., or if it's a company launching, they might decide to launch somewhere outside of the U.S. with more clarity, or maybe not?
I think that there's always a certain appeal of having, a U.S.-based company. But yeah, there's plenty of companies that have said the U.S. is moving too slow. We're going to stand up our company elsewhere.
Do you think there's are you guys involved in those types of decisions? It'd be interesting to be a fly on the wall, between a sort of, firm like KPMG and a crypto company or a large company of any sort, and sort of deciding, well, maybe because of XYZ, we should not be in the United States. Are those, obviously those are critical conversations to have, but what do those conversations look like?
In those conversations are, and we help clients in a lot of different ways, and those conversations are absolutely something that we've seen and have been involved with. It's a lot of it comes down to can we do this? It comes down to taxes. There's a lot of different parts of those conversations. There's benefits and risks and rewards from choosing different domiciles, and it's a big decision for any company. I don't think it's a decision made by anyone in a silo.
Yeah, that's super interesting. What other critical decisions that a company would make do you guys sort of get involved with to help guide and inform the end result?
And as far as different types of programs that we help out our clients with, we help a lot of clients stand up functions, especially if they are a crypto first or a fintech that are just entering. We'll help them stand up their programs and help guide them on the industry practices, on how they could build these programs in a leading way, and what they should think about as they're making their decisions on the programs that they're building. And those programs, cover the gamut from compliance and information security, third-party management, operational risk.
Mm-hmm.
The list goes on.
The list goes on. The list goes on. It does. Well, we're kind of getting to the end of the hour, I guess if we think about the launch of this product, what are some of the things that most excite you about it, and you'd want the market to wrap their head around?
I think that the most interesting thing that's happening, or most exciting thing for me that's happening, is the recognition that this is no longer a startup. This is becoming an institutional world. We are seeing organizations that are creating products that are specifically from the ground up for institutional investors, to meet an existing need, to meet new needs that might not even be there yet. There's just so much opportunity now for new products and services, or more efficient products and services, especially in the financial services world, that are enabled by crypto and by blockchain. And just look at DeFi right now. Look at DeFi lending, especially. I think is something that's amazing. If you look at what's happening with DeFi lending and stable coins, that stuff's exciting. It's not something that has been something that's so accessible for so many people. I think that accessibility is possibly a challenge in the future, as we talked about earlier. But it's very exciting that those capabilities are so regularly available for individuals or institutions that are looking for new ways to either invest or find investments.
Yeah, it'll be interesting to watch it as it develops. Super interesting. Let's see if there's are there any other questions from the audience as we look to wrap up? I think I saw someone named Joey typing earlier. Anyway, it was a great webinar. And I appreciate everyone for turning out to listen to Sam talk about the interesting work that they're doing over at Kpmg. There is a chain link related question that I see. This has every appearance of being a product delivered by, I get the idea of polling. What is that? What is the end goal? What is the end goal of the offer? That's a good ending question by Joey Jones. How does this play into, I should have asked this, Joey. Good point. How does this fit into like the whole bigger picture of what Kpmg is doing in crypto, and how do you see that playing out? Like, if, what's the job interview question that's always asked? Where do you see yourself in 5 years, 10 years? What does the Kpmg crypto unit of 5 years from now look like, and how does this product fit into that?
I think that overall, our goal and our thought, we've really been pushing for a couple of years now, is that there are certain steps that need to happen in order for crypto assets to become part of the institutional world, and to hit products and services at every level, whether it's at the central bank level and even at the retail level. And I think that we're going to see ourselves being involved in those changes. We're seeing things. We released a white paper earlier this year called Cracking Crypto Custody, about how custody is a fundamental capability that's required for institutional crypto assets. I feel like we are going to continue to see ourselves help our clients meet the continuous challenge of what does it mean to offer crypto assets on an institutional scale. And I think that our capabilities, including Chain Fusion and the companies that we're working with and integrating into our work, is going to continue to revolve around that, and especially revolve around the types of regulation and whether new or changed as we keep going.
Oh, that's an interesting point, which makes me think of another question, actually. I feel like if we look back on 2017, 2018, when we saw a number of announcements from large financial players like Goldman Sachs talking about dipping their toes into custody, in my conversations with folks at some of these firms, the reasoning behind delays or not necessarily diving in fully was this lack of clarity from regulators or not being comfortable yet with the tools and infrastructure. When you talk to companies like that, large banks with whom I'm sure you have some degree of business relationships, depending on different parts of the firm. But are those companies getting any more comfortable? What issues still linger for them?
I think they're starting to get more comfortable, and I don't think that I think the same challenge still exists there's uncertainty in the regulatory environment, that there's too much on the line for these big institutions to start jumping into a new asset class that could negatively impact their other businesses that are considerably larger. I think that same challenge still exists. There's absolutely recognition
Does Kpmg ever worry about that?
I think that we have been working our work with crypto first organizations now actually goes back a couple of years, and our team has worked really hard to help our internal folks, our risk management, our independence folks, which are regular everyday conversations with us. We're very fortunate to have a team that's very supportive and extremely well informed on what's happening in the market and with the concerns of the firm are and should be. And it's definitely been a challenge. It's an ongoing challenge because there are a lot of risks out there. It's like any business. There's, you have to manage your risk and who you're working with. And it's definitely something we still think about all the time, especially going back to 2017. There were a lot of organizations that wanted to work with Kpmg. There are a lot of organizations that are no longer around or that we weren't comfortable with. And I think that a lot has changed since 2017. And some real, true, trusted players are coming to market. You're seeing large financial services organizations offering their products and services to the crypto fintechs. There's not a couple smaller banks that are offering services anymore. It's the big players. And I think that is a indication from large FS that they're feeling comfortable around the asset class and the whole concept of crypto assets in general, not just cryptocurrencies.
Well, when one of the big ones dive in, please let me know so we could get that story out. Sam, really great conversation. I've been loving these webinars. They're so much fun. I think they're great at, kind of showing folks what's going on, what's some nice color and casual, fun conversation. Thanks for doing it.
Thanks for having us. This was great. Really appreciate it. Thanks everyone for your questions.
Thank you everyone for the questions. The engagement has been great. Really appreciate it. Talk soon. Stay well, Sam. Thanks everybody for tuning in. Take it easy.
Thanks.